Hey, welcome to the podcast, everybody. Thanks for joining me. Appreciate it. Well, stock market down today, could not follow through from yesterday's gains. Of course, we had the big rally yesterday that the Dow Jones was up 275 points, and throughout this whole sell-off in the last couple of months, one thing I've been telling you is obviously we need to see selling exhaustion, and we're not really seeing intense selling at this point, and the bulls would probably argue we're base building, meaning you go down, you're bouncing around the bottom, and it just takes time, and eventually it'll go back up. So part one is to get rid of the selling intensity, which we've kind of checked that off for the time being. We don't seem to be having the 400-point down days anymore. But what we're not seeing is we're not seeing the good up days followed by more good up days. And the reason why is because we still have all this uncertainty. One of the things going on right now, obviously the president's speech is this evening. Perhaps by the time you watch this, he will have already done it, and you may have already seen it and reacted to it. But, we know it's going to be at least $300 billion stimulus package, right? And it's going to, from everything I'm hearing, it's going to involve more of the same of what we've heard in the past. In other words, it's going to have more unemployment benefits. It's going to have an extension of those payroll tax cuts, which were 6.2% on Social Security for employees, and it's dropped down to 4.2%. That's going to go through 2011, of course, and they're going to try to extend it. So I think, we already know we're going to get that kind of stuff. Is there going to be anything else in there? And I don't really think the stock market rallied yesterday based on that. I don't know if it sold off today based on that because, to propose something from somebody that we already kind of know what the playbook looks like, right? I don't think there's going to be anything shocking in there. But even if it is, there's going to be a lot of stuff proposed potentially, but it's not going to be how much that stuff's going to get through. And if it does get through, how much of it's really stuff that's going to get the economy really going. And I just don't. I'm not real bullish on his plan because of some of the stuff that's leaked out. Now there are things reporting coming across the wires here saying it's going to be $450 billion, not $300 billion. So that's a big chunk of money. And we're going to see more bridges and stuff like that. We're going to see some of the infrastructure building to schools, which is kind of a way of helping out some of the towns that have mismanaged their finances. So there's going to be a fight over this. Don't think there won't be. So I don't think the stock market's necessarily trading off of that. So I wouldn't be looking to that as to how to position yourself either prior to the speech or after the speech. But we did have the Dow Jones down 119 points. You can see the Dow Jones Transports was down 1.3%. Pretty much everything across the board was down, but it wasn't really one of those lopsided days. The utilities were up a little bit. Companies like Microsoft, Coca-Cola, which I'm long, those were up on the day. So it was one of those days where you look at your screen and you got some things that either should be up were up, or things that shouldn't be necessarily correlated to the stock market, they were up. So overall, there wasn't that much intense selling. It did look to me as if people that bought yesterday were saying, "Hey, I bought enough. Let's see how things go." And there was a little more selling than buying, and so it pushed down. So it wasn't a horrible day. It did bounce around quite a bit, recovered from some losses earlier in the day, and then of course sold off. But again, gave back half of the gains from yesterday, and really, again, no follow through, and that's really the key right now. Now, perhaps you've heard, before we get back to the markets, I did want to share with you all these wildfires going on in Texas. There's a lot of podcast listeners not in the state, some of them not in the country, and we're dealing with a severe drought in lots of parts of the country, but especially in Texas, a small town called Bastrop, east of San Antonio, east of Austin, is really, I've heard over 1,000 homes have been destroyed so far, really not getting any better, and it's very, very sad for those families. We're dealing with our own drought here where I live in this small community just west of San Antonio, out in the hill country. And these are some of the pictures I took yesterday. This is about a mile from my house, and went down close to the fire, destroyed 125 acres, but was spreading very, very quickly, even though the wind was only probably 5 miles an hour. So been dealing with that the last day or so, but we did get evacuated, power shut down, but my house wasn't in danger because the prevailing winds were coming from the north, pushing it south. No homes destroyed, fortunately. It's on a big military Camp Bullis, it's called, so there was no structures damaged from what I understand, but they've been putting the fires out all day long, and in addition to that, they put them out last night, smoldering still, some pop-ups today, but all day long, military helicopters coming in, taking water from a nearby golf course and sucking it up through. One helicopter had a big tube sucking it up. Another one, some military planes, military helicopters came in and were grabbing water out with some of these, basically these buckets, and then dropping them on there. They've been running literally about 10 hours straight doing this. We're talking 8 helicopters constantly. So it's been big fire, and just wanted to share some of those pictures and some of the stuff that's going on here locally, as you say. But let's get back to the market now. Okay, so this is what we've been dealing with the S&P 500, or the spiders. This is the spiders, same thing, ETF for the S&P 500. But we've basically been in this box, in this kind of range where we've gone from the top to the bottom, back to the top, back to the bottom, and we didn't quite reach the old lows of 1120 or so. And you can see basically the volume spiked up, of course, during the August sell-off, and then has been coming down and continued to go down. And really, again, for those bulls out there, what you want to see is big green bars. You want to see up days with strong volume behind it. And again, we talk about not only quality of volume, which I think is more important than quantity, but we do want that quantity there too. And what you notice is the spiders had more volume today than yesterday on this, low volume yesterday, but bigger volume today on the sell-off. So not the healthiest of situations. Now, I've showed you the hourly picture before. I think it's important. When we did start to roll over, I did add a short position, and of course, the market opened down 300 points yesterday, rallied back. The day before yesterday, rallied back, had a big day yesterday, and then sold off today. And you can see, the ranges are really getting tighter now. We're getting into this where we have this trend line on the bottom, and the bulls are saying, well, we've got this, and maybe we'll rally to the top, which we haven't. If the president comes out and says something dramatic and everybody thinks it's the greatest thing ever, the rally may continue. So, but right now we're kind of in the middle ground, and I think it's, again, a time to keep beta fairly low. There's no reason to be a hero right now. The S&P is having big up days, big down days, and there's nothing really to cause me to get too excited unless you're into the very quick trading, which is A, difficult, and B, most of you out there that listen to this aren't interested in doing that short of term of trading. And so for us to want a sustainable market that's good, we need to see some evidence. We need to see the market prove itself to us. And right now, again, we needed to see a follow-up to yesterday's rally and didn't get it. So it looks like it may be on the verge of rolling back over. A lot of people believe we have to go back and test those old August 9th lows. When you start to hear things like we have to do this in order to get this, every time it's a little different, right? And it's a game of probabilities. I don't think right now it has to go down there and test those old lows for the market to rally. I don't think it has to do that. In fact, if you look back at some of the previous times where the market was difficult, it went down, it bounced, and it may have even made a marginally new low and then rallied from there. So, that's not the way to do it. I think one thing that you can be doing right now is there are some companies doing very well, and I think perhaps staying short some of the indices or something like that while you're being long some other stocks may be working. And again, today was a day where not everything was down. There's a lot of stocks up today. So, continue to take a look at those particular companies. And again, don't forget the income, because if we do go back and look at the period of time, that we're looking at now, if you go back and look, I don't know, back to the August 8th, we're gyrating. But again, if you look at today's close, we're back where we were back on August 8th. So unless you've traded it quite a bit, here we are a month into this, and the stock market's at the same place it was before. And so it hasn't really gone anywhere. And that's where that income comes in handy. It's slow because of the fact that you don't see it every day coming in, right? But if you own a lot of things that produce income, it starts to pile up little by little. And I know there's a lot of you out there asking, how could this market possibly go up right now? What would make it go up? And there's lots of things that would make it go up. Number one, all the things that that are bad about this market, everybody else knows, okay? And I don't think you and I have... I may get to see more information than you do simply because of the time I put into it, and maybe I've got some resources. But in general, there's a lot of things that you and I both know and everybody else knows. And so a lot of the things that we are worried about, concerned about, are priced in the market perhaps. And so any bit of good news can cause it to rally, number one. Number two, stocks may be a good alternative to other things. Are people going to want treasuries at some point? No. There's a lot of... Are they going to want gold? Maybe they think gold's too expensive. There's a lot of these things that maybe stocks are actually the default. So that's another reason why stocks could rally. It's kind of an asset allocation change. And look, there are a lot of companies I've mentioned before that are cheap. They're not dirt cheap like in 2009 and March of 2009, but they are cheap, and they're getting cheaper because their earnings continue to go up and their prospects continue to get better and better. And yet the stocks continue to not go anywhere. I mean, Microsoft's a great example of that, I think. Also, stocks could simply go up because of the fact that the people that sold have already sold, and the selling exhausts. That's what we've talked about. So, once you get the selling exhausted and there's no more, a little bit of buying pushes it up. So there's lots of reasons why the stock market could go up. But again, I would rather be agnostic as far as, is it going to go up or down? I don't think you should have that mentality, because when you start thinking that way and you start positioning that way too early, you're betting on being wrong. Right now, this is a 50-50 probability, maybe 60-40 to the negative, right? I mean, we've got some longer-term trend lines that have broken, like the 50 crossing the 200, the death cross. So, a lot of people believe that we're going to simply just bounce and then fail once again. Could we go up to this 1260 level on the S&P and work our way up and then ultimately fail and go into a new bear market? That's highly possible. I just think you should be prepared for a bear market, and you should be prepared for a bull market. And I think you should take your feelings, your personal feelings about the president, Congress, the prospects of, different political figures and where the country's going and all those things that are so depressing and negative right now. And by the way, that's another reason I think the market can go up, is because so many people are negative that it's really almost a contrarian thing to be a bull right now. So, but in general, again, take your personal feelings out of this, because if you don't have any expectations, be opportunistic. If we get into a bear market, that means things are probably getting worse in this country, and that's not good. But I think we can still profit from it by, again, selling into rallies. It's one thing we did in 2008 is sell into rallies. When you're in a persistent bear market, which we're not in a persistent bear market yet, but if we get into that, there's going to be sharp, vicious rallies. You've heard before some of the biggest and best rallies occur in bear markets. And that's what a lot of people believe we've been going through in the last couple of weeks here, is when you get these moves from 1120 up to 1240, 1250, that those are just bear market rallies. I don't think we're necessarily a bear market. It's just too early to tell. So because of that, be agnostic about it. Okay? Trade some things, buy some things for good investments, maybe short some different areas, and I think you have this multiple strategy that you're using to manage your portfolio. I think that's going to be the best way to play this and not bet the farm one way or the other. But if we do get in a bear market, don't think of it as a negative. It is probably easier for us to make money in an up market simply because we're optimists, right? We believe that things should go up, and they generally, look, a long-term picture of the Dow Jones, it goes up. It doesn't go down. But there are periods where we go through some really tough times, and if the economy picks up for whatever reason, the stock market will take back off. If it continues to get worse, and there's a lot of reasons why it's still, I mean, look, some people are arguing a recession, some aren't. I think there's a greater than 50% chance we're going to be in a recession, and the market's pricing that in perhaps right now. But if it starts to work its way down and it becomes a persistent bear market, shorting on those rallies it's the opposite of buying the dips, and that's what I'm going to recommend doing. Right now, though, we've had a sell-off. It's priced in the fact that we've got slower economic growth, and look, things did change coming into that August 2nd deadline for the debt debate. Things were okay before then. Were they great? No. Was the country going in the right direction? Not in my personal opinion. But as far as supply and demand of the stock market, as far as the economy, it was okay. It was enough to justify stocks being up there. But now what happened is that debt debate really did tip the icing on the cake, and it really caused not only people to scale back, it caused companies to scale back, not only hiring, but using any of their capital. And I think that's what pushed us over the edge. But the stock market has priced that in to a certain degree. If things are going to get worse, it's going to price more in. So we should be prepared for a bigger sell-off. But again, let's focus on the supply and demand. And right now what I'm telling you is that we need to see some persistent buying to get bullish again, and yet we need to see some persistent selling to really go net short. And I'm not net short, I'm still net long in this market while we gyrate. But in the meantime, still keeping a lot of things in income production. And so that's the way I'm playing it. So have a wonderful evening. Appreciate it. Hey, don't forget, carleggers.com is the blog. There's a subscription up to the top right. Feel free to forward them. There's also twitter.com/carleggers. And for those that are on Google+, the newest and neatest technology, I'm posting some stuff on there. So Google+, I think it's by invitation only right now. I'm not sure how they're doing it, but it may be the Facebook killer. I am not a Facebook user. I guess I got enough friends. I always joke around with my wife and tell her, you don't want girls from high school looking me up, because you know they will. But but anyways, I think Google+, if you're into that, Carl Eggers on there, and then Eggers Capital for the money management website. All right, folks, have a wonderful day. We'll talk to you soon.